2017 started on a strong note for ETFs, with January being the largest on record for net inflows. Well, Emily Cheetham is the director at iShares Capital Markets and joins us now. Thanks for joining us. As I say, I mean, what a start to the year.
Yeah, absolutely. It's been an unbelievable, actually the greatest January on record for ETFs. So we've seen over $30 billion of inflows globally so far this year.
I mean, it's not surprising to a certain extent, considering what we've seen in the markets and in politics at the moment.
Yeah, absolutely. I mean, in general, ETFs tend to do well when markets are volatile, and certainly when investors are looking to put money to work quickly. So more and more investors using ETFs, plus obviously the political volatile background, as you mentioned, so no surprise.
And the change in where the money's going from sort of fixed income to more shares, that's continued as well?
Yes, absolutely. So we saw that at the end of 2016, and we've seen that continuing into 2017. So at the end of 2016, we saw a lot of money flowing into U.S. equities after the U.S. election. About $180 billion throughout 2016 went into U.S. equities, but over half of that came in the month after the election, so quite significant. We've seen a continued trend so far this year with about $14 billion into U.S. equities. The big question is whether or not that will continue. So every time Donald Trump seems to get on the news, people,
which is quite often,
which is at this stage quite often, people are starting to maybe rethink whether or not they want to be putting money into U.S. equities. So far this year, we've seen a strong preference actually for U.S. small caps, which has been a new trend that we've seen. And then actually over the last few weeks, as people have maybe not been allocating as much to the U.S., we've seen some of that money come into European equities, which is incredibly exciting for us to see.
And what kind of European equities are we looking at?
Right, so last year European equities saw outflows after the Brexit vote, both actually broad Europe and UK shares as well. So what we've seen so far this year is money going back into European equities, quite a lot of that coming from European investors. They're going actually into broad Europe, but also into UK equities, which has been exciting. So last year had just over $30 billion of outflows, but we've actually seen a reversal, so over $3 billion of inflows just in the last month alone.
And is there specific areas, though, within that? I mean, European shares is quite a broad a field, as it were.
Right, absolutely. So we are seeing some sector preferences. Financials tend to be doing quite well at the moment, especially the way that policies have been changing. Trump, again, it all goes back to Trump. Whether or not his policies will be a favorable backdrop for financial companies remains to be seen. But we've seen a lot of European investors allocating to European banks as well.
You mentioned that with Brexit, we saw outflows from Europe, but now we're seeing these inflows because of Trump. Which is winning that battle? Is it the Trump versus the Brexit?
Well, it is a good question, and obviously the similarities between the two situations have been spoken about quite a lot. I think the question is which has more probably volatility in the short term, and at the moment that seems to be probably the U.S. shares and Trump, whereas as some of the political situation unfolds in Europe. I think the other truth is that in general many investors were underweight European equities for so long that actually just coming back to a neutral weighting of Europe will actually mean that a lot of money is going into European equities.
In 2016, we've talked a lot about the emerging markets as well, and Asia and Japan, a real focus as well.
Yes, exactly. So Japan is a difficult one to figure out, because what we've seen is actually net inflows into Japan throughout 2015 and 2016. However, the Japanese central bank was responsible for over 100% of the inflows. So they're really aggressively buying their own local market, which can somewhat manipulate the figures. What we've seen so far this year is actually money into Japanese equities, about $11 billion, but just under half of that has come from Japanese central bank. So what we're actually seeing is the introduction of other buyers, and actually a lot of European investors who've been buying Japanese shares. So we would expect to see that trend continue. Japan's been in the headlines a lot over the last few weeks, so I wouldn't be surprised to see that trend continue.
So not surprised to see Japan continue, not surprised to see the flows we're seeing into Europe because of Trump. Is there anything that you think we could see that could be an anomaly, or that investors might sort of catch investors unaware?
I think emerging markets, as you mentioned a little bit earlier, are still a big question mark for investors. So investors were underweight EM for so long. It could look attractive from a valuations perspective, and we have seen some money return to emerging markets. We have a few of the kind of Trump related, again, not to bring everything back to Trump, but Mexico and some of these other countries, which will be very dependent on Trump's policies. So we've seen quite aggressive inflows and then outflows, a lot of volatility in that market. But again, I think could present an amazing opportunity as well for investors.
And finally, I mean, commodities, again, I mean, we've seen the moves in gold. I mean, is that where are we seeing inflows into commodities ETFs as well?
We are. And we saw that at the end of last year. In fact, commodities have been, so gold in particular saw about $20 billion of inflows last year. Commodities can change week to week, and obviously very, very volatile asset class. I think we'll continue to see people buy gold on the back of negative Trump news and then sell gold to go into equities when they feel that the markets are slightly more stable. So people tend to use it as a safe haven asset, obviously, and I think that they'll go in and out of it quite interchangeably as they see other buying opportunities in the shares market.
Overall, what do you see for the ETP market, I suppose, short term over the next month and for 2017?
Absolutely. So the last few years have been dominated by fixed income. I think that trend is continuing on some fundamentals. However, I think this year will be the year of equities. So I think whether or not it's Japan or European equities coming back into favor with a lot of investors, there's still a lot of people putting money into U.S. financials, U.S. technology. I think this will be the year of equities, and we're excited to see where the money goes.
And we're excited to hear, and we'll get updated on a regular basis as well from you. Thank you very much. Emily Cheetham there, one of the directors at iShares Capital Markets, on the flows we've seen already this year and where we could see them over the next couple of months, indeed the whole of 2017.